Hey everyone, and thanks for jumping back into the cryptoverse. This is the weekly premium video. I hope you guys enjoy the content. This time we're going to be doing a recap because we put out a lot of content over the last several weeks and months. There's some new people here, and I feel like a lot of people don't even fully know what's available to them with this subscription. So what we're going to do is we're going to go through everything. We're going to go through everything so that you guys know what there is, how to understand it, and how to use it. So the first thing you should do is, and what I would recommend, is going over to app.intothecryptoverse.com. Okay? And when you log in, you'll see something that looks like this. Now you'll be prompted for your subscription email, so you just put that in, it'll send you a code, you then enter that, and then it'll let you in. Now we're currently developing this, and a lot of people have been asking for a lot of different things to be added to this. I want you guys to know, I hear you, we are working on adding those. Some of the most crucial things that you guys want added that I agree with are to get live charts up and running on the website. So we are going to be working on getting that done. So know that that is in the pipeline to being completed. But just give us a few more weeks on that. Now, what you'll notice, these are the risk levels, okay? And there's a normal view, which sort of looks like the app, okay? And there is an app. So remember, if you guys go to the Android store or the Apple store, the Google Play Store or the Apple Store, you can download the app, okay? And you can find it just by clicking on these buttons at the bottom of this website, okay? So compact view if you just want to get a quick snapshot of what's going on. Now, there are some things that we need to clarify with the risk levels. There's only 2 risk levels at the current time that actually account for diminishing returns. And those 2, in fact, are Bitcoin and the total crypto market cap risk. So the other cryptocurrencies do not account for diminishing returns. And diminishing returns is unfortunately something we have to deal with in life, right? This is just how it works. Sort of like when you upgrade from 1 monitor to 2 monitors, feels like your whole world is turned upside down. You have all this real estate, screen real estate you can use. And then when you go from say 2 to 3, some improvement, 3 to 4, not really, right? 4 to 5, you get diminishing returns, right? So diminishing returns are just a thing of life. And with crypto and whatnot, when you're talking about these gains, you're going to expect higher gains earlier on, and then the gains to diminish over time. That's not a bad thing. It's a good thing to know so that you take advantage of the situation rather than thinking that it's going to continue to put in the same returns it has put in the past without having some type of a long reaccumulation phase following a bear market. So one of the things to look at with the risk levels is look at the risk confidence score, okay? If it's a 9, it's pretty high. And what we showed is that both the total crypto market cap risk and Bitcoin risk both made it to the 0.9 to 1 risk band earlier this year. The other cryptocurrencies, some of them did, some of them didn't. And the reason why some of them don't is because, again, none of them are accounting for diminishing returns. Now, you might say, well, how are some able to make it to the 0.9 to 1 risk band, but not others? Well, that's with the risk confidence score. The higher the score, the more likely it is to not make it to the 0.9 to 1 risk band. Okay, so I'll say it again. The higher the score, the more likely it is to not make it to the 0.9 to 1 risk band. The lower the score, it's up in the air. And where do these scores come from? Well, it just comes from how much data we have to work with. Each risk metric is just a function of itself, of the performance that crypto has done relative to the Solid, relative to Bitcoin, relative to Ethereum. So with 2s, these are certainly capable of making it to the 0.9 to 1 risk band. Why? Well, they've barely been around, right? Like they weren't even around last cycle. We don't know what they're capable of. And so it certainly stands to reason that they could make it to the 0.9 to 1 risk band again, because we just do not know what they are capable of. When you look at things like Ethereum and they have risk confidence scores of 7, I would be very shocked to ever see it go to 0.9 risk. Very shocked. I do not think it can make it there. That's why I say a theoretical limit for Ethereum on the wristband would be zero point 0.8 to 0.9. And that would be the theoretical limit. That doesn't mean you should wait until 0.8 to 0.9 to sell or to DCA sell, but it means that if you haven't sold or you're just looking at it one day and that's where the risk metric is, it's too far gone. Right? We're too far extended. We have to come back. This is what we said for with Bitcoin when it's in the 0.9 to 1 wristband. These things can't be sustained forever. And we've looked at time spent in wristbands to understand the fact that you cannot expect it to hang out in the 0.9 to 1 wristband forever. Normally, it only happens for a few days, and we saw that again. So remember, look at the risk confidence score, and that probably helps people understand, how much you should put your faith into that not being able to outperform what is theoretically predicted. But for instance, like the avalanche risk against Bitcoin, just like a few days ago, went to 0.995. I don't know if you guys were watching it, but it went almost to $60. This was before Bitcoin was at 49K, and we went to 0.995 risk. And again, we then pulled back. Think back to the summer of 2020 when Link went on this crazy run. What did the Link Bitcoin risk go to? It went to 1. And that was the time where we took profits out of Link and into Bitcoin back in the summer of 2020. In August of 2020 when Link went to $20 and it was like 160 or 170,000 Satoshis. The risk from Link Bitcoin was 1, and then it made sense. Okay. So the lower the risk score, right, the less confidence you should put into it. Now, if you see a cryptocurrency one day and the USD, the risk against the US dollar is say 0.1 or 0.05, and you don't have any of that crypto and you've been waiting to get some, if buying it at 0.05 or 0.1 is, it's about as good as you're ever going to get, right? It's about as good as you're ever going to get. And so it's something to take advantage of if you don't have a position in that crypto and you're looking to get one, or if you don't have a position large enough in that crypto and you're looking on expanding it, okay? So for instance, the DOT's risk just a few weeks ago went down to 0.05, I believe, at around $11. And a lot of people scooped some up. Now, I didn't personally scoop any up at the time because, again, I have not sold any of my DOT that I bought between $3 to $6 last year because my goal was accumulate DOT for between $3 to $6 and then ultimately just let it run, right? Like let it run for the cycle. And that's what I'm doing. But if you don't have a position, you can certainly use these risk metrics to accumulate positions in cryptos that you're interested in accumulating. Now, since Bitcoin accounts for diminishing returns and the other ones don't, well, you could assume, and we're going to update this soon, okay? So I don't know exactly when, probably within the next few weeks, we're going to try to normalize these to account for diminishing returns somehow. But since Ethereum does account for diminishing returns and we are saying it can't go to 0.9 risk, then maybe you could assume, this is not the best way to normalize it and we'll do it in a better way, but for now you could just assume, all right, well maybe it's actually 0.582 risk and not 0.482 risk. Because if it can't ever make it to 0.95 risk, which we know Bitcoin can, then you might assume that it's already at a higher risk level than it is. But that's sort of the risk you take, and that's why I'm saying I still DCA them up to 0.5 risk, because I recognize that there is inherent more risk with altcoins, but they have more upside potential. I also make sure that my Bitcoin position is by far my largest position. So that's sort of like my safe investment in the space. I expect Bitcoin to trend up with time. You should not be deterministic about anything. But if anything you're going to be deterministic about, it should be that Bitcoin will trend up with time. I think Ethereum is very likely to trend up with time too. I believe several altcoins will. But again, if you ask me in 15 years what's going to be around, if I had to pick only one, I would say Bitcoin. Every other one, I don't know, right? We just don't know what could happen. Could something catastrophic happen on that chain that you just completely unforeseen? Maybe in 5 years, it becomes outdated technology. This happens with companies all the time. But with Bitcoin, it's just about, it's about the network effect, right? And Bitcoin is a train, and it's going to go through bear markets, but it's ultimately very, very likely going to continue increasing in value. Whereas there's a lot of altcoins that did crazy things in 2013 that didn't do anything in 2017. There's a lot of crazy moves from altcoins in 2017 that haven't done anything this cycle. So just because a coin's doing well this cycle doesn't mean it's going to do well next cycle. And because of that, you want to make sure that at all times if you're accumulating crypto and Bitcoin's below zero point 0.5 risk, then you don't want to stop accumulating Bitcoin. Bitcoin, it's your safety net, right? It's like your safety net. And I'm very conservative, right? I'm very conservative when it comes to price predictions. But my general thinking with Bitcoin is this cycle 100 to 200K, next cycle 300 to 500, and following cycle after that, we're probably looking at $1 million. Now, I also think the cycles are lengthening. I don't think we're just on a 4-year thing where it's just 4 years, one and done, repeat, rinse and repeat every 4 years. Is it possible that it ends up playing out like that? It's possible, and we're going to keep a close eye on it. But I think there's a high probability that we extend the cycle and continue moving along here. So with that said, you could be looking at, say, in 15 years or something, Bitcoin could be at $1 million, right? And your future self would love it if your present self took that information to heart, and actually thought about that. And so putting some away for your future self to enjoy, I think is not a bad thing. Okay, it's certainly not a bad thing. You could even come up with like a hodl stack that you keep, you don't do anything with, and then maybe one that you try to siphon off profits every once in a while. Okay, remember, taking profits is not a bad thing. A lot of people like to make it into a bad thing, but it's not a bad thing. Now, as for me, I'm a U.S. resident. I have to take taxes into consideration. So I do not trade crypto in short-term capital gains territory. I'm not paying 40%. I don't want to pay 40% on a trade, especially if I think the crypto market's going to continue trending up with time. I'm not going to bite the bullet and pay 40%, right? I mean, again, that's why I accumulated DOT and Avalanche last year. So that, again, right now, some of these tokens are coming into long-term capital gains. I haven't sold any of them. Even though DOT went from $3 to 50, back down to 11, and now it's at 25, I haven't sold any of it. I just accumulated heavy back then, and now I'm just letting it ride, and some of it's now coming into long-term capital gains territory. So remember, the top 6 on here are my top positions: Bitcoin, Ethereum, Link, ADA, DOT, and Avalanche. Now, in order of how they are in my portfolio, it goes Bitcoin, Ethereum, ADA, DOT, Avalanche, Link. Okay, Link used to be higher, but unfortunately it has not performed as well as some of the other cryptocurrencies recently, especially things like Cardano and Avalanche, and it has been overtaken, right? It's just simply been overtaken, and that's just the way it works sometimes, right? And that's why slight diversification is a good thing. I still am hoping that Link will come through in the clutch, but at the same time, there are going to be projects that don't do anything for long periods of time. Link was one of the few projects that did anything remotely impressive in the bear market. Now it seems to be one of the ones that's not doing as much in the last year. Okay, because again, at this point last year, it was also around the same price because we went on that parabolic move to $20. Granted, we took profits, and then it went back down to 7, which is, by the way, where it went below 0.5 risk, which is when we started buying again, or when I started buying again. But yeah, it's just been chilling here at 0.4 risk for a while. And what would it need to do? What valuations of Link would we need to see for it to start moving up some of the risk bands? Well, for instance, for it to go to a risk against Bitcoin of 1, it would need to go all the way up to about 280,000 Satoshis, which it's nowhere near right now, right? It's nowhere even near that at the moment. Right now we're at 5,200 Satoshis, so 25,000 Satoshis, excuse me, not, let me just click on it really quick. So you can see right now it's 5,269 Satoshis. The highest we ever went back in the summer was, I believe it was, okay, so it was 16,894. Okay, so 894 back then. Now we're at 5269, and in order for us to get to the point, the point or the 0.9, let's say to 1 risk, 0.0028. Okay, we're nowhere near that right now. We have a long way to go to get to that level, and we'll see if it happens. If it happens, then I'll just take profits again, probably back to Bitcoin. If it doesn't, then I'll just continue earning interest on Link. So these are my top 6. What are projects outside of my top 6 that I don't own, but I do think they are decent projects, right? And again, this is something I said at the beginning of the cycle when I was getting these 6 projects was, there's going to be projects that pop up and they're going to do well, but I also am not that inclined to chase every single project that does well. I'd rather just pick out a few projects that I feel like are going to stand the test of time and then just keep putting money into those, watch them trend up with time. Okay, so there are other projects I like. I think Solana is a great one. At the same time, the current risk level is 0.8. So if you don't have Solana, I feel like, buying it at this point, it doesn't mean it can't go up, right? It's just your risk on it right now would be relatively high. Theoretically, we know it's capable of going to the 0.9 to 1 risk band because the risk confidence is only 2, and it's already at 0.8 risk. But in order to get an idea of where it would have to go to get to 1 risk, which is what it's done before, $164. So you might say, well, if I buy Solana now, it could theoretically go up to those levels. The problem is the risk level right now is relatively high. So if you buy it and it goes up, then hey, you got lucky. But I wouldn't say it's managing your risk very well. Again, what we say is it's not about your returns, it's about your risk adjusted returns. Okay? And chasing pumps in crypto is one way to get absolutely wrecked, right? One way to get absolutely wrecked. Now, if Solana had been around for 4 or 5 years, the risk level at these prices could be a lot lower. But the fact of the matter is we just don't have that much data on it. And so far, this is what it's telling us. There can other be confusing things too, like why is Tezos at 0.799 risk when it hasn't done anything? That's the reason. It's never done much of anything, right? And because it's never done much of anything, whenever it does anything slightly remarkable, it's at a pretty high risk level just because it hasn't ever proven itself to do anything more remarkable than that. And so again, I don't own Tezos, and I mean I don't own it, and I have no interest in getting it. I mean, just look at it, right? It hasn't done much of anything over the last year or two, and it's still at 0.8 risk. That tells me that hey, it's not really worth it. Maybe one day that'll change, right? I mean, like if it were to all of a sudden go to $50 and then it retraces or something, I'll be like, all right, it is capable of doing something. But do I want to gamble a lot of my money? Do I want to invest a lot of my money into a project that I don't feel like is doing that well? I mean, it's not even that much higher than it was 2 years ago. No. Okay. So Solana, I think, is a good project. The problem right now, I think, is the risk levels are really, really high, and I'm not, if you want to chase it to get a position, you can, but again, you are taking on an incredibly large amount of risk by doing so. I'm not that enthusiastic about Atom. I don't hold any of it. The risk level on it right now is relatively high as well. But I think Solana is a decent project. Matic, I think, is a decent. Aave, I also would say, is a decent project. And, these two right now are still below 0.5 risk. Now, back in the bear market, I accumulated Bitcoin and Ethereum up to 0.5 risk and Link up to 0.5 risk, and then I accumulated ADA up to 0.4 risk. And but then about 7 months ago, I upgraded ADA to say, okay, I'm gonna do it up to 0.5 risk now, not 0.4, because accumulating up to 0.5, ADA has proven itself to be really, as we've said, right, the racehorse of the market cycle. So again, if you don't have a good position in ADA, DCAing into ADA up to 0.5 risk, no matter what happens, it seems like not a bad way to go. Okay, it doesn't really seem like a bad way to go. Right now, you're sort of chasing the pump. I mean, we're really close to 0.5 risk, but again, it goes back to dynamically DCAing. So this would be sort of like the final level you would DCA at. If it drops down to a lower risk band, then you would want to double up on that DCA. If you're following the moderate risk tolerance approach or dynamic dollar cost averaging. So some other things on here. We also do have stocks and metals. The way that I'm getting this has been giving me an error recently, so I need to fix this. We have the S&P 500 right here. It's currently at 0.86 risk. With the stock market, I tend to just move in pretty heavily at this point whenever we go below 0.75 risk. We did it a few months ago, went in pretty heavily. It hasn't really had a consequential pullback in the last 2 or 3 months, and so when it does, I'll just go in heavy again when it goes below 0.75 risk. Right now we're trading at $4,500. Pretty high, right? Pretty high risk level. It's been a long time since the stock market's seen a 5 or 10% pullback. But it's one of those things that everyone calls for a crash in the stock market for every single month, and then eventually they're going to be right. But I don't trade that, right? I mean, If it gets to these higher risk bands, like you can take profits, as I've said, if you need the money for something, right? Like if you need the money to buy a house, if you need the money maybe to buy crypto or something, like if you need the money to do something, there's nothing wrong with taking profits. But if back in March of 2020, the risk on this hit around 0.29, and I even put out a public video at the time that was barely watched at all. But I said, hey guys, like this is ridiculously low. This is the time to load up. And since then, it's just been a crazy move. So for the stock market, I sort of just sit idly by. Anytime it goes below 0.75, I move back in. But I'm not moving out right now, right? I mean, I have taken a little bit of profits here and there for certain purchases that I needed to make, but I'm not just actively selling all of my stocks, because I do believe that the stock market will trend up with time. There's going to be shakeouts, right? But I feel like those are just meant for buying the dips, right? Not to be too cliche. Now, if you go to the risk dashboard, app.intothecryptoverse.com/dashboard, you'll also see a lot of these things over here. So you can click on the risk dashboard and it'll take you to this one. You can also click on the strategies one and it'll take you here. And I feel like not a lot of people know about this one. So let me explain it, okay? We made this one a long time ago, a really long time ago. And again, it's anonymous, right? I can't tell who people are. It just says anonymous pumpkin, anonymous tiger, right? I mean, anonymous camel. I have no idea, right? What you can do is you can look at this risk strategy that we talked about, right? Like imagine you've accumulated Bitcoin up to 0.5 risk, and you're like, all right, now what's the plan, right? Well, you can go over here and you can say, all right, well, let me assume I have a certain amount of Bitcoin, right? And someone right now they have 2 Bitcoin in. Anonymous Squirrel is saying they have 2 Bitcoin in, and Anonymous Penguin is putting in a projected future peak of a very modest $120,000. Therefore, based on various strategies, you can look to see what you would be selling all that for if you were to follow that strategy. Now, it's a projection, right? It's not actually based on the current risk level. It's based on the current risk levels, but it's a projection out of what we would assume they might be in the event that we continue moving up. And if you follow a conservative approach, which means you would have already started selling a while back, you would have already started selling some. But let's say you follow moderate, then it would mean between 0.5 and 0.6 risk, or actually this one's that when you reach the risk band, it would mean selling 1/15 of your position, which would give you $7,900 if you had 2 Bitcoin that you're looking to sell over the course of a move from where we are today to $120,000. And if you were to follow that dynamic DCA approach, which again looks something like this, right? Where you sell a little bit here, you double up here, triple up, quadruple up, and then do 5x, you'd be looking at around 100K. After you sell it all, it'd be worth around 100K. If it were to go to $120,000, right? But that would be in fact selling it at the first wristband, right? I mean the very first wristband, and not waiting until say a higher level, okay? Now if it were to go to 120K, that would I mean, like let's pretend like it would go to 140K, and you can see how these things change. Everything is clearly shifted up, but you really can see how the amount you're getting or whatever for it goes up as you navigate up the wristbands, if it in fact makes it to that wristband. Okay, now for instance, if you don't sell anything and you sell it when we reach 0.9 risk, which would not be at 120K, it would be at say a much lower value that's being projected out, then if you sold both of them at that level, you'd make around $210,000. In order to sell it in order to make $280,000, you'd have to sell it at 1.00 risk, which it might never make it to. Okay, but that gives you a brief idea of the profits you could be making in the event that you did that. Now, if you wanted to be a little bit more risky and say instead of doing it at 0.5, you do it at 0.55. Instead of doing it at 0.6, you do it at 0.65. Instead of doing it at 0.7, you do 0.75. You can see it would yield higher return, right? Instead of 117, you might make 131. Instead of 210, it could be 230. You also see what's the dangers of not taking profits, right? What are the dangers of not actually realizing any profits on the way up? Well, imagine you say, I'm not going to sell anything until it gets to the 0.9 to 1 wristband. Well, what happens if it makes it there, and you sell it at 0.9 risk, you say, I'm not going to gamble for 0.95. I'm happy with 0.9. 210. Looks like someone just changed something over here, right? But 210, right? 210. What if it doesn't make it there, right? What if it doesn't quite make it there? And you would started already taking profits. At least you would have taken profits before then, right? At least you would have taken profits before then. And if it does make it to 0.9 risk, then the difference between just starting to sell a little bit earlier to make sure you're banking some profits and then selling everything at the Sea of Tranquility, right, the 0.9 to 1 risk band, it's only 30K. I mean, it's only 30K, which again, 30K is a lot of money, but relative to the percent here, it's not that much. So a lot of people, they spend so much time trying to time the top. But if you just dynamically dollar cost averaged your sells like you might your buys, you just continuously bring in money, right? You continuously bring in money, and you don't worry about timing things exactly, right? You don't worry about it because we can't do that. We can't time things exactly. No one knows exactly where peaks are. No one knows exactly where the bottom is, but this is something you can use. And again, this is selling at the beginning, doing a same percentage at each risk level, actually. So I'm just now realizing that this one's the same percentage. It's been a while since I looked at the sheet. This one's the same percentage at each risk level, not dynamic DCA. This one's dynamic DCA, right? This one's and you can see it actually moves up a lot more as you go to the right? Instead of 4 to 100, it's 1,300 all the way up to 132,000. So, or 4.6 to 102, it's 1.3 to 133. So you can see this is dynamic DCA y plus 2y plus 3y plus 4y, and then this one over here is exponential y plus 2y plus 4y plus 8y, which means basically you double up your sell every risk band higher. So the reason these are shown in red is because if you want to be conservative, it means you start selling at 0.4. Moderate, you start selling at 0.5. You don't start selling here, you keep buying here. Aggressive, you keep buying up to 0.5 or up to 0.6 risk, and then you sell. The hodler, you DCA up to 0.7. YOLO, you DCA up to 0.8. Sea of Tranquility, you DCA up to 0.9. And then when it gets to the 0.9 risk band, you take your profits. Okay, so you can see, in fact, that this here, you can see how it scales versus this one. These numbers are generally higher, especially earlier on. As you get later, obviously it's the same because you're just selling everything at the same point. Exponential, again, it's weighting it more towards later sells, so you end up making more. If you weight them all the same, you make less. If you weight them so they go higher as you go up the wristbands, you make more because you're counting on them to ultimately go higher. But the problem, right, is if you don't sell anything and they only go up to 0.6 or 0.7 risk, then you're going to be wishing you had taken some profits. Okay, hopefully that explains this sheet. We also have the same thing for Ethereum, but remember, it's probably not going to make it to the final risk band. We also have weighted risk tab where we have a few cryptocurrencies on here. You can put in maybe how much you own. Let's say it looks like someone has, Anonymous Chinchilla has put in 4 Bitcoin, 18 ETH, 4 Link, and 4 ADA. Let's actually change that to be a little bit more realistic, probably like on an average average portfolio based on percentage. So let's change this link to maybe, I don't know, like 1,000 link or something. And with ADA, maybe we'll say 50,000 ADA, maybe 25,000 ADA, something like that. I don't know. Well, that's actually higher than Ethereum. ADA's gone up so much recently. Something like that. Okay. And what it shows you, it'll show you what your weighted risk is at the time if this is your portfolio. And you could say, all right, well, my weighted risk is below 0.5. If one day you're looking at this and your weighted risk is 0.9, then it means you got to start. I mean, if history is an indication, you really got to start taking profits, right? That's the idea. Okay. So going back to the dashboard, so that covers risk dashboard, strategies. Again, the strategy dashboard by Bitcoin Dynamic DCA is this middle one. This is constant. This is selling the same percentage at each risk level, not dynamic. So not what I said to begin with. This one's dynamic. This one's dynamic but exponential. Okay, this one's just y plus 2y plus 3y plus 4y. This one I don't really like because it weights too much of the cells at the end, and I don't want to be that risky with it. And if you scroll over here, you can see the linear weighting matrix. We also, if we go back to the dashboard here, if you click this, it'll take you to all the reports. You just click the newsletters and you'll find all the prior newsletters. Okay, like you can click on them. I mean here, you can like say click on this one and it'll show you risk analysis from a long time ago. And this is, look, this was right in the early 2020 when we were still blue, right? And we were talking about exactly this strategy of dynamically DCAing on the way up. Like look at this chart right here. When we created, and this was actually well after we created it, you see that chart, and then that was what it was back then, and then you look at what happened, right? I mean, it came up to the 0.9 to 1 risk and then back down. So you can click on a lot of these different charts. You can click on here's one on hourly price analysis. It tries to give you the best time of day to buy Bitcoin based on historical data. Other ones tell you the best day to buy Bitcoin based on the week. We have modern portfolio theory, that kind of stuff, talking about how you weight your portfolios and whatnot. We have all sorts of stuff, right? We have the trading view indicators. Make sure you guys get your trading view indicators. If you don't, how do you get that? Well, you just go to your profile, okay? Go to your profile up here and you can put in your trading view username and you will get the trading view indicators. If you're not sure which ones you would get, you would go to indicators, invite only scripts. You'll get the bull market support band, cow and quarter, logarithmic regression bands for Bitcoin, the regression rainbow for Bitcoin, log the price of the fair value for Bitcoin, or for anything. Theorem logarithmic regression band, theorem logarithmic regression rainbow, link Bitcoin exponential fit bands. This one's not as important today. And the log of the price over the 20-week moving average. So those are what you get. Those will be the indicators that you get. All you need to do is, again, go put in your TradingView username at app.endofcryptoverse.com. Also put in your public Ethereum address for future NFT airdrops. We already airdropped one earlier this summer. We'll be airdropping more in the future. But again, the gas fees are astronomical right now, and we're not going to be airdropping any at the moment. Again, the first one cost us 5 ETH to airdrop. So look to the future. We will have more in the future. So make sure your Ethereum address is there. Your public one, right? Your public Ethereum address. If you click on this, it'll take you to all the prior videos. If you're curious about all the prior premium videos, and you can go see, what did we talk about in the past? You just go look at it, right? I mean, here's one, the Quantitative Investor 1.4 risk management. Here, I mean, again, sorry for the quality, but I mean, this is what it was back then. I didn't really have any fancy equipment. I don't have the sound on right now, but this is where we were talking about it. You can go look at other things, like other prior videos, right? We even talked about Ethereum dynamic DCA strategy, and this was, we were talking about the strategy dashboard. If we were to look at this one, I mean, the price of Bitcoin is $11,000, right? I mean, and it looks like Ethereum, I mean, obviously it was much lower at the time. If we go look, you can see it right here. It was $400. So you can go back and watch all these videos if you want to, right? You can go watch all these videos and see what was going on back then and what we were talking about. This one was the middle game. This one was a pretty important one. This one was, we put it out right before that massive drop. We said, one of the things we were talking about here when we called it the middle game is to expect the dominance to go up, at least for the summer, and while Bitcoin's below the 20-week, right? And this is how we prepare for these moves, by understanding what are these shifts in the market, what are these shifts that are going to happen, and this is what we talked about, right? We said the dominance is about to go up, especially if we don't hold the 20-week moving average, and it's probably going to shake a lot of people out, right? It's going to shake a lot of people out. And I mean, and you can keep going, and you can see, here's one on yield farming. Here's one on just a general market update. This was a reflection on the interview I did with Michael Saylor. A recap answering questions. Candid thoughts in the top 50, where I just give my candid thoughts in the top 50. Here's the one where I talk about developing that risk, or that trading view indicator, the cow and corridor. And that one, I mean, I more or less developed as a joke, but so far, it's held up relatively well, right? I mean, so far, it's done relatively well on all of these moves to the downside, okay? And if we go look at that video, when we put it out, let's see, this one, you can see back at, during that time, we were all the way up here. And so far, it has stood the test of time. Will it always? I don't know. But you can go look at that if you want to understand how we developed it. Pretty dubious how we did it, but you can go look at that if you want, okay? And some other things are if we go to the, let's see, back over here, we can go back to, say, the dashboard. Let's go back to the dashboard. There's the Telegram bot. So I would encourage you to click on that if you're not in the Telegram alerts group. You can also get access to the chat room. Make sure you follow that. Email support. If you need help with anything, with accessing anything, just go email support. Here's the NFT website if you're interested in the NFTs that we're launching. Here's the staking website if you are wanting to stake either your ADA or your AVAX tokens, your Cardano or Avalanche. And if you want to get a t-shirt, I mean, again, I don't know why you'd want a t-shirt, but if you do, there's a discount code. Okay, make sure you use that discount code. Bella.2021. And I'll tell you guys right now, if you've made it this far, there's another discount code we recently did. I believe it's what is it? Why doesn't ADA ever do anything? I think that's what it is, and you'll get a little bit more off as well. So again, if you want a t-shirt, go check it out, and you can get a t-shirt. There's also coffee mugs. But again, that's neither here nor there. From here, if you go over to this one and you go to some of these other ones, you can find videos. Okay, these videos are actually looking at how we've done prior, how Bitcoin has navigated prior market cycles, and you can see, time we've spent in various wristbands, and you can actually live through it as if you were going through it to help better understand just how little time we spend in the 0.9 to 1 wristband. It's gone like that, right? It's here one day, gone the next, not to be seen again for a while. And I'm going to play the whole video because I want you guys to live it, right? I mean, it's proportional to the amount of days this is a prior market cycle, but it's proportional to the amount of days, right? So the time that you're watching this in each wristband, and then watch what happens when we get to the higher ones, and watch how little time we spend there relative to the lower wristbands, okay? The lower wristbands are meant for accumulating Bitcoin. The higher wristbands, which we don't really spend that much time at, relative to the other ones, those are meant for dynamically DCing out. Okay, so we're gonna let it keep running for a little bit, and we'll see. So we have about another 45 seconds or so. We're gonna let it keep running. You can see right now, back in that cycle, we were still toying with the 0.3 to 0.4, 0.4 to 0.5 wristbands. We haven't even gone to the 0.6 wristband. Think about all this time of accumulation during this cycle, just all this accumulation, mindless accumulation. And then, right, eventually, we start to get to the higher wristbands. And we never really spend that much time there relative to the other ones. Again, watch how quickly they go by compared to the other ones. They don't make it nearly as high as the other ones do either. You can see now we're flirting with the 0.7 to 0.8 wristband some. And we continue to push higher eventually, right? We continue to push higher, and ultimately we make it to 0.8, 0.9, and then it's gone, right? And then it's gone, right? You don't spend that much time at the higher wristbands, and that's the point of when it goes to those 0.9 to 1 risk levels, you want to take advantage of it. And if you're curious right now, 0.9 risk corresponds to about 120K. So, and again, these are dynamic. The risk levels are, in fact, dynamic. So remember that. They do change. A year from now, it's not going to say 0.9 is 120K. It's not going to say that a week from now. But that's what it is today. The longer it takes us to get to these levels, we're just kicking the can down the road, right? Nothing wrong with that. I hope I've covered most everything, I believe. That generally covers a lot of what you'll get here. The Telegram alerts channel, I think, is something that more people need to join. Not everyone joins it, but that's probably where I put most of my time and energy during the week. And then we do 2 weekly premium videos. We put out one on Sunday, my time, and we also put out one Wednesday, my time, right? I'm East Coast of the United States. So Wednesdays and Sundays, we do premium videos. In 2022, we're going to do 3 premium videos a week. Okay, so I told you guys back in 2020 we said, all right, 1 a week. In 2021 we'll do 2 a week. In 2022 we'll do 3 a week, and then in 2023 we'll do 4 a week. We're going to stick to that, right? So it's still 2 a week right now. Once we get to 2022 we'll do 3 a week, and we'll just keep making it more and more and more as we continue to go along. Maybe eventually we'll just have one every single day, right? I mean, there's certainly a possibility that we'll do that, but I think we're a ways off from that at the moment. I'm still trying to build everything up and grow things. We do have employees that help build out some of the infrastructure that you see, and we're continuing to grow. So I think that covers everything that we wanted to talk about with a general recap. So make sure you guys watch this video again if you missed anything, and yeah. Now if we go actually look at Bitcoin right now, we were unable to put in a weekly close that was again in the green. All right, and we're also getting the bull market support band again. Now it's coming in again. It's still around 42K. Again, the 20-week SMA is right at 42K. It's right at 42K. And we also know that September isn't normally the best time for Bitcoin. Is this one going to be different? It's possible. But the thing is like, the speculation on what it's going to do is irrelevant, right? No one can predict the future, but what we do is react to it. Okay, so right now I'm not buying Bitcoin because the risk level on it is above 0.5. If it drops below it, then I'll DCA more. If it continues to shoot up, then I might take some profits. But I'm not gonna do anything at the moment. Remember, if you buy up to a certain risk level, give yourself a little bit of a gray region between where you don't buy or sell, so that you're not buying one day and selling the next, because that just becomes day trading, and that's no fun, especially with taxes. So right now I'm just sort of letting things ride a little bit. And if it comes back down and we test the 20-week, then I'll keep DCAing. If we go below the 20-week, which I mean is a possibility, then my guess is we're just going to kick the can down the road 3 more months. Okay, I'm not, back over here. I said 3 to 6 months. We had our first 3 month lull here. I do think this is enough. I don't think we have to have another 3 months, but it's possible that we have another 3 months. I don't think we need, like, if we go back below it, I'm not going to say 3 to 6 months. I'll just say I think we need, up to 3 more months before we can get back on track. But again, if we come back down and we test it, hopefully we hold the line. If we don't and we have another lull in the market, then again, I just think it provides us additional time to load up. And I know actually a lot of people watching this would actually prefer that, right? Would actually prefer that. So do keep that in mind. And I think that basically covers things, right? I mean, everything's ultimately dependent on Bitcoin, and clearly we're coming into September, which historically isn't that great for Bitcoin. It'll be interesting to see what it does if this one is pretty similar to most Septembers we've seen, where it interacts with the 20-week. Again, remember, we've interacted with the 20-week SMA every September for like the last 5 years, right? We interacted with it here, we interacted with it here. This is 2020. This is September of 2019. If we go to, say, September of 2018, we were interacting with a 20-week from below it. If we go back another year, September 2017, we were interacting with it. If we go back to September of 2016, we were on the 20-week SMA. So again, if we test the 20-week SMA again in September, I don't really think it's that out of the ordinary, even if it does cause people to really get upset. It would actually be more so the expectation, right? I'd say it's more the expectation. What would be less expected would be to not test it. And if we don't test it, I mean, that's fine, right? This is why we accumulate it anyways. But if we do test it, well, then that was pretty much the expectation all along. Thank you guys for tuning in. Let me know if you have any comments below. I'll try to get to those. Remember to join the alerts channel on Telegram if you're not already in it. And I will see you guys next time. Bye.